Hello and welcome to Markets in Review that started this week on the 10th of September 2018. I just want to concentrate today realistically on three main things that happened this week that were quite interesting and caught quite a lot of attention. First of all, let's have a look at the start of the week around the RBA, and Tony and I actually went over this in the economic view, so please by all means go and have a bit of a look at that. It was very clear that the RBA, although they are aware that there is a high level of debt to income in this country and that there is possible pressures from upside movements in out of cycle rate rises, overall they're pretty happy with where things sit. They don't believe there will be a credit crunch and they don't believe there'll be a huge crash. They are still seeing that most people have buffers in their home loans, etc., that actually allow it to sit in good stead. So that's an interesting sort of scenario. You can certainly debate that as much as you want, but that was the overall takeout. It doesn't mean that it can't happen. And I think that needs to also be alluded. And what we're going to be looking at next week is that it is actually 10 years since Lehman's collapse. So have a look out for what happens in Market Watch next week. Then the two main things that have happened this week. Going to start with the actual confidence numbers from the business side and also from consumer side, as we have had a lot of questions from you guys out there around whether or not there was any reaction from markets around the political fallout at the end of August. And the markets themselves didn't react to it, but we have. And that is clear in the numbers that were taken from both NAB on business side and the consumer confidence side. NAB's consumer confidence numbers were down. They're now sitting at about 7. And that is the average and the long run average over the last 15 years. Conditions actually improved, but that shows you that business is clearly worried by what happened in Canberra, and that came out in the numbers that we saw. They are clearly asking questions around forward spending. They're also asking questions around the actual stability of the overall sort of political sphere, and that came through in that confidence numbers particularly. Consumers did the same thing, except consumers did it across the board. So the fall in the consumer confidence hit the lowest level we've seen since November last year. It's still an expansion, so it's still at 100.3, which means we're still optimistic, and it is up 2.7% year on year. But if you look at the whole composition, it was across the board. So our belief in our forward finances, the ability to buy a new home, the ability to do spending over the coming 12 months, all of that dropped back quite dramatically, over 2.5% or more across that space. And I think that clearly comes down to what happened, and it was alluded to that the political instability certainly had it. So there is the first major actual data that showed that what happened in Canberra at the end of August has actually played out. Didn't hit markets though. The final thing to look at for this week was what happened in employment, and I think we want to end on this because it's a bright spot. There is no other way to argue about it. Employment in this country is finally moving in the right direction, particularly one area that I've been talking about for a while, which is underutilization. Fell to the lowest level in 5.5 years, 13.4%. Still high, not going to sort of sugarcoat that in any way, but it is finally eked out and getting lower, and that is what we want to see. So that is meaning that therefore the ability to put pressure on wages increases. So unemployment fell to and held at 5.3%. That has now been where it's been sitting for the last 3 months. It's the lowest it's been for over 4 years. Very, very impressive indeed. Job growth, 44,000 jobs added in August. If you now have a look, full-time jobs in 2018 have increased by 205,000 jobs. That's very, very impressive. Participation, although it continues to tick up, which hits the unemployment, we're absorbing it. So the employment numbers are there, and it's not just men, it's actually women as well. Women are back at the highest level of participation in the employment market on record, which is again another real positive. So the employment numbers are there. You saw that in the Aussie dollar, it jumped right back up off the back of it. And I think that therefore shows that although there is some doom and gloom out there, although there is some negative news, overall the economy is moving in the right direction, and overall employment is finally starting to eke out gains that we need to see.